I'm Howard Klein. I've been in business 23 years, started in copper and pivoted to a lot of electric metals over the years. We also have a YouTube channel called Rockstock Channel and podcast and a newsletter. So we've been focused on very much electric metals or age of electricity metals, done a lot in lithium. Have two former clients on this panel, Farhad over there and Jay, both of whom sold their lithium businesses to Lithium Americas back in the day, but then pivoted, Jay to copper and Farhad to potash. So interested to kind of talk about both of those commodities and how they see those markets. Tate Sullivan is an equity research analyst at Maxim Group in New York, and institutional and retail focused, and he has a very eclectic mix of coverage of many of the companies of which are here, including NioCorp and a few others that you'll talk about. And Bela Onken is from KfW, IPEX-Bank in Germany, largely a lender to the battery materials space. So we have a diverse group of people, and we're going to be talking investing in the future, funding the energy transition, and balancing supply and demand, which is a interesting, overall category. So why don't I've given a little bit of introduction, but one by one, Jay, Tate, Farhad, and Bela, talk about what you want to talk about and how you see the world. And we could start, Jay, with copper. Why did you pivot from lithium after gold? We had a success in gold together in China back in the day, to copper, 5 years ago.
So a lot of it is price dependent. We saw copper move from a price standpoint in 1999 to 2011. It went up 7 times, from about $60 a pound up to $4.50. And then for the last 15 years, copper has been flat, and it stayed around that $3.50 to $4 copper price. And so we just see that there's been a lack of investment for the last 15 years in the copper space. So Camino is trying to buy as much copper as possible ahead of another cycle, which is going to be driven by fundamentals. There's two demand drivers. There's two price drivers. Sorry, there's the demand side, driven by electrification, which we'll talk about today, and then there's the supply side, which is a deficit of new projects coming online.
Great. And Camino is the name of your company, and you're listed where, and assets where, and market cap, et cetera?
So Camino is a company that's listed on the Toronto Stock Exchange. We've just acquired a project down in down in Chile, which has its primary environmental permit in place to start construction. And then we've got advanced exploration in Peru. So in terms of a value driver, we're looking at a re-rating to go into production in Chile, and we think we'll be one of the next producers of copper in the world. And then number two, we're very active in Peru with our partners, Nititsu Mining, drilling a discovery at our Los Chapitos asset.
Great. And you're here having a bunch of one-on-one meetings with investors. And Tate, okay, so you're an equity research analyst. Do you like copper?
The copper name we cover currently is Solaris Resources, developing a project in Ecuador. But it's great to see the copper price back up around $4.50, what you said recently. And just as an introduction, I'm equity research at Maxim, covering the whole industrial sector space. For Maxim, we started covering the mining space a little more than 3 years ago to focus on the development of U.S. critical mineral projects around the world. So it's been great to see the regulatory development on that front, but also we've tried to diversify our coverage to multiple critical minerals. And one here I just met with, and it's been great covering, is NioCorp NB, that has 6 critical minerals under development from its project in Nebraska. We also cover another company here on the gold side in Zimbabwe called Caledonia Mining that is taking investor meetings here, CMCL. And it's great, Howard, having you host the panel, because I've usually been on the other side on your seat, hosting panels and fireside chats. I've done 4 virtual mining conferences in the last 3 years, and I would say the energy around the sector from the last conference you had last month, and then at this conference included, is the most energy that we've seen in the 3 years that I've been covering the space. But yeah, we'll happy to discuss different metals and different companies we cover after shifting to other introductions. Thanks.
Interesting to hear that optimism for the sector. So Farhad, this is your second time around in potash. You had a success in Ethiopia, multiple successes. Third in potash and one in lithium, and now back to potash. So a very experienced value creator and is here as well at the conference. So why don't you tell us a bit about your background and those prior successes and why you shifted back to potash after your lithium success?
Howard, good to see you. And I think we've known each other for, 15 years now?
Yes.
Longer than that? Okay.
That's right.
So look, I mean, we don't really pivot back and forth. So we look at supply-demand dynamic of about half a dozen commodities where we feel that we have strengths. And for about 3 to 5 years, that's the window within which we usually develop these projects. And last time, as you know, we did lithium. And when we looked at lithium, it was 2017 when no one was looking. And that's the key to making money in this industry, as probably some of you guys know, when no one is really looking at that particular commodity. And it was very difficult at the time to raise money for lithium, as you remember. But we ended up actually selling that project right before the downturn. With potash, it's the same situation. I mean, potash has been quite dormant. It's not really on the radar screen of many investors, and that's what we like. And we found this new project in Gabon about a year and a half ago. Great location, great jurisdiction. And potash is becoming a geopolitically hot topic. It is directly linked to food security in many countries. This country is taking potash now seriously. Now, the U.S. has been one of the major importers of potash for years. They import almost all of its potash, and most of it is coming from Canada. But an interesting thing is, and we'll talk about it later on, is that for the first time in, I don't know, at least in my lifetime, the U.S. government is taking a lot more active stance in terms of actually securing different minerals, including potash. So that's why we're in potash, because we looked at what was coming and tried to find the right project. So hopefully this will be the right project for us as well.
Great. And where is the project?
It is in the West Africa. It's in Gabon.
In Gabon.
Yeah.
Okay. And is potash considered critical? Was it on a critical minerals list?
It is actually. It is on the critical list in I'm not sure about the U.S., but in Canada for sure. And I think they just put it on the critical minerals list in the EU as well. And again, Bela will know better whether it's there or not, but Canadians definitely put it on. Although Canada is a net exporter of potash, of course.
Okay, and Bela, tell us about your focus at KfW.
Yeah, thank you. So I think what you have put here on the topic of the theme is exactly what we're doing, funding the energy transition and balancing supply and demand. It's exactly what our bank is, the mission of our bank doing. So the topic of the panel here can describe it better what my mission is basically providing funding for mining companies who supporting the global energy transition. So our bank is owned by the German government. We're acting as a commercial bank, as a full commercial bank, but with a mandate, a clear mandate. The mandate is, one of the mandates is to support the global energy transition and also to promote trade and business between the European Union and the rest of the world, in particular North America. So that's why I'm here. I'm from the office here in New York, the representative office in New York, where I'm responsible for covering the Americas, or mostly North America, Canada, and the US. And we have seen, we have been a big bank financing mining projects. We're one of the few banks in the market, and you know us. So we finance a variety of mining projects, being copper, traditional copper. Most of our projects are copper, what we talked a lot about, and that's still, I would say, in the mining business, our bread and butter business, where we see the majority of our business. But we're moving more also to explore opportunities in critical minerals, especially what has been touched earlier by you, lithium, cobalt, and all the critical minerals we need to make the energy transition happen. Having said that, copper is a well-diversified metal, which you need in all kinds of industries. But the energy, you always needed copper. It's a big industrial metal, as we all know. Having said that, the future demand of copper will be mainly driven by the energy transition. And if you look what the demand for copper will be, it basically will triple over the time. And if you look at the supply of copper, it's basically not there yet. So it's really lacking supply. So that's why we need companies like you, Camino, developing copper mines. We have financed a lot of the big copper projects in South America, in Peru, Chile, Brazil. We have been lender of the most prominent ones you have seen in the market. We see a big pipeline now building up in North America, Canada, US, and of course a sustaining pipeline in Latin America, which always has been traditional supplier of copper. So our mission is to support that, to make sure, as a topic today is, that there is enough supplies of critical minerals for the energy transition. Just as an example, what I found quite impressive, but most people may not realize, I just was reading the other day that a typical average EV vehicle, electric vehicle, needs about 4 times as much copper as a traditional vehicle, which is gas-powered vehicle. So you need 160 pounds of copper for each electric vehicle. So that alone is fueling demand. But copper is not only, as we know, in energy transition, it's also used for data centers, AI. You need, there's huge demand for copper. There's not enough supply, and we committed to make sure there's enough supply in order that the Western world, Canada, US, European Union can work together to become a little bit more independent from China. We will never become independent from China, but I think the mission is also to reduce dependence and by diversification, by investing in assets in North America.
So copper in Latin America, yes, very much focus for the energy transition, but interesting, this title says energy transition. America and like the new Department of Energy head, Chris Wright, the Trump administration says they don't really believe in the energy transition. They believe in energy addition. Yep. So Tate, you said that there's more energy or electricity at this conference than there has been in a couple of years. A couple of years ago, like energy transition and ESG and lithium and battery materials was like all the rage. So, so this title is a little bit odd, for North America, but he's European, so I think they still believe in the energy transition over there in Europe. But what do you think accounts for the energy in this conference compared to prior years?
Yeah, thank you. Yeah, energy and transition. In fact, I'd relate it today and this year to, U.S. critical minerals is a form of, link it more to balancing supply and demand, and particularly what's in the headlines about international trade negotiations. And so the energy now in the room, so to speak, is related to the U.S. critical mineral effort. In the long term, lithium can be part of that. Copper is certainly part of that. Aluminum will be more part of that. But I think more and more investors, what they're doing in the market, generalist investors, are looking at the entire market and saying, what's on the critical mineral list? What have we heard politicians talk about? And what stocks can we go and invest in that have liquidity, that are on major exchanges? And in my opinion, there aren't that many. You can go to largest mega cap mining companies, but then you're not getting concentrated exposure to the U.S. critical mineral story. So, for instance, NioCor, that is presenting at the conference, NB, screens very well because it has niobium, terbium, it has heavy rare earths, scandium. It's already on NASDAQ. It has Maxim negotiations already in place. So I think more and more companies are starting to gravitate to, investors are gravitating to these themes, and companies are as well. I met with a company this morning that has a U.S. project. It's based in Canada, but it is going to shift its listing and uplist in the U.S. here. So right now it is a sector with momentum behind it. Lithium can be there again, I think, in the long term, but the critical mineral focus, the names that screen well on that is what has enthusiasm now, based on my coverage across industrials too.
Okay, well, NioCorp is a major focus, in rare earths. So rare earths has become the Achilles heel, it seems, in the negotiations between China and the U.S. So the markets, there's a lot of speculations like still in the market. Certain things like lithium been in the doldrums, et cetera. But we're not risk off everywhere, right? There's plenty of uranium's interesting, gold's interesting, et cetera. So Jay, you heard a lot about financing from KfW into Latin American copper. Your story has, you're a junior market cap. I'm not sure exactly where it is, but you have assets which are going into development. And within copper, there's a broad dichotomy of investor universe. A lot of small, early stage exploration, not huge market cap. The price of copper has been like okay, but it hasn't been like hot like some of these other commodities that Tate just mentioned. So tell us your story and your journey, and what's the path to, I guess, building a producing mine.
Yeah, sure. So Howard, your first question was why copper, and so we think that copper is the right metal to carry electrons around the world at the right time in the cycle. But where, copper? So when we looked at building our copper business, we follow the geology. The largest endowment of copper in the world by multiples is in Chile. And this is why Chile is the largest producer of copper in the world. And most people don't know this, but the US imports over 70% of its copper from one country. It's Chile. Okay, and so so if you're going to build a copper business, you need to be connected in some way, shape, or form to Chile and Latin America. The second producer in the world is now it's competing between the DRC and Peru, but Peru has the same geological or similar geology as Chile, but it's underexplored. And similarly, the DRC is underexplored. So when you look at those three jurisdictions, they produce over 50% of all the copper in the world now. And it's based off geology. So we've chosen to build our business based off of our exposure to Latin America, in particular in Chile, where we have a project that's ready to build, and in Peru, where we think we've got our next project to build, which is underexplored in copper. We mentioned the energy transition. Call it what you will. The world needs a lot more energy. On a per capita basis, with 8 billion people on the planet now, on a per capita basis, the world needs more copper, in these growth jurisdictions to move, electrons around. How that energy is sourced, whether it's through conventional fossil fuels or through renewables, I wouldn't say it's up to debate now. The fact is that renewables is a growth industry. It's growing around the world. And even if you look in the United States, go down to one of your largest utilities in the United States, the Florida Power Company. I think it's the fourth or fifth largest utility in the U.S. And they're investing about $400 billion, over the next, it's $100 billion or maybe it's $100 billion over the next 4 years. Significant investment, and if you ask the CEO of that company where their investment is going, he'll say, look, we've got investments in nuclear, we've got investments in gas turbines, but we're investing in renewables because that is going to reduce the costs of power to people within our utility jurisdiction. So call what you will, but the fact is there's going to be multiple sources of energy, new energy sources going forward in the future, and it depends on copper to transmit and distribute those electrons around the world. I mean, again, another statistic here. Most people don't realize, talking about utilities. I mean, one of the largest companies in the world, the largest company in the world by revenue, most people don't know this, it's China Grid. China Grid. And if you look at where the demand has come from the last few years, it's China Grid is buying a lot of copper, just to improve their grids and smart grids, within their country. And that's going to happen worldwide, which is why we're building, our copper business, and we're focused on Latin America.
Interesting. So in China, corporates like that often invest and recognize the need for the upstream raw materials. I've been focusing a lot on the data center and age of electricity kind of demand, and I'm wondering, just like auto OEMs, right? You both sold businesses to Lithium Americas. Lithium Americas partnered with GM, which actually bought an equity interest at a project level to that asset, which is very unusual for a Western company to do that. The Chinese do that all the time. But I'm wondering if the utility companies, right, in America, or these hyperscalers, like the Metas and the Amazons of the world, who are spending now $75, $100 billion a year, will realize that they need to, like the auto companies, invest all the way upstream. Do you think that could be possible for a project like yours, or Bela, could you see that happening in projects that you're going to finance, the debt for?
Yeah, I mean, and I can basically endorse everything what has been said before. I mean, and also coming back to what you said earlier about the energy transition, yes, it's probably true that renewable energy may be less in favor under the current administration than it used to before. Having said that, I think the current administration is more about having a more balanced approach, discriminating maybe less to alternative or traditional energy sources such as nuclear or oil, which also plays an important part in supplying energy, but and maybe subsidizing less projects such as offshore wind, which are not as cost efficient. But I think they're still in the US. If you look at Texas, for example, which is always used to be a Republican state, Texas is one of the biggest states of renewable energy because it just makes sense. It's low cost energy, having big onshore wind parks. It's local. We finance actually some of the biggest energy projects in New Mexico, which is actually the largest wind projects in the Western Hemisphere, which is extremely cost efficient. And yes, so I would say there might be a more balanced focus on energy sources, which includes, as we have all seen, the current administration is pushing nuclear energy a lot in the US, coming back. But there will always be a big focus on renewable projects, and not just pure because they're renewable, but because they are source of efficient, cost-efficient energy and helping the US in achieving its energy independence. And for that, we need copper assets to basically transition that energy. So we see, as said earlier, there used to be a big focus on Chile, Peru, which still is where the biggest copper assets are. But there will be more and more coming in the US, where we see the US government pushing that projects with the IPEX-Bank, for example, also in Canada. So I think there will be a more balanced supply chain as well across the world. And yes, what we have seen about China, yes, what you mentioned earlier, China is investing big in that assets, and that's why it's so important for the Western world to catch up and make sure there is a balanced supply and demand to make sure the Western world stays where it is.
Okay.
That's a great point, Howard. Always looking for catalysts in the market, but imagine if you had a Microsoft do a co-investment or in a project or an equity investment in a mining company. They would talk about a great catalyst to look for. I can't think of one off the top of my head, but you had Meta last week or 2 weeks ago announced a supply agreement with Constellation Energy to extend the life of a nuclear power plant. It's this kind of interest from larger companies, from other industries in the mining sector that can get it going, just like aerospace and defense and a lot of U.S. critical mineral projects right now. I think it will still be on the offtake agreement side as opposed to equity co-invest, but that would be additive. I don't think it's happening in the next 1 or 2 years, but that when you get that private investment along with Maxim financing alongside the projects, that's a wish of mine on terms of a catalyst to get the stocks working, but it doesn't sound like it's in the near term.
Okay, you mentioned Meta and the offtake agreement, but there were, I think it was another company, maybe it was Google or one of the other ones that basically want to build 3 new nuclear plants, and an offtake agreement wasn't enough. They are committing to invest equity in project development for those nuclear plants, which is behind my question. If they're doing that, will they not? You know, I remember like nuclear utilities, right? We're buying uranium mines because, you know, it was only a very small percentage of the overall cost of that. So it would be amazing, right? No one thought GM or others would be writing equity checks for lithium mines, and it happened. So but the auto companies don't have as big balance sheets as the hyperscalers, and so it'll be interesting to see what happens there. The utilities, on the other hand, I think have, you know, their return thresholds are very different. I'll get to you in a second, Bela.
Yep.
I just wanted to talk with Farhad and Jay as representing issuers, I think, here from TSX V. You know, what's the for a while now, like the people have talked about the venture exchange, you know, or Canada generally being a challenging, you know, junior market. If you can kind of like talk about that, because Tate's talking about, like, you know, America's kind of like woken up here on the back of the tailwind of, you know, Trump, you know, mine baby mine, not just drill baby drill, and other executive orders in connection with critical minerals. But how are you finding the Canadian market, which has kind of had some challenges for junior mining, you know, over the course of, you know, the last number of years?
Yeah, I mean, potash is a little bit different. Again, Canadians know potash quite well. Canada is actually the largest potash producer in the world. The other two being Russia and Belarus. Hence, there's so much demand for actually securing your own potash source, because 35% of potash comes from Russia and Belarus. Look, I mean, in our case, we've seen that transformation of Canadian markets, at least in the case of Millennial Potash, that I would say probably 70-80% of our capital raise is not happening in Canada. It's outside of Canada. Outside of management and the board, which owns about 30% of the stock, the next largest shareholder is actually out of Singapore, a family office out of there. And after that, it's another family office out of Dubai, and then a PE fund out of the US. Of course, there's still a lot of Canadians who own the stock, but it's not the same as, you know, I don't know, even 5 years ago, let alone 10 years ago. So I don't know whether it's the same for Jay, maybe it's different for copper, but I mean, that's what we've been experiencing. But also, as I mentioned earlier, we have new kind of players or new entrants in the potash space, and this is basically the large development financing institutions out of this country, out of Europe, of course, out of Africa itself in our case, and that actually provides us quite a bit of optionality compared to many others who are not in developing nations. So, for example, if we compare apples to apples, a potash project in Canada versus potash project in Gabon, we'll probably have a lot more interested parties because it's not in Canada. So that's how we're handling the situation. Frankly, in our case, I mean, we have, you remember, we did have one potash project in Saskatchewan. We ended up selling it to actually Kalun Salda out of Germany. But it would have been a lot more difficult today to go and find a proper project there and try to fund it, let alone build it. It's just not enough capital available for something like that. It's just not enough capital coming from what we call conventional source of capital, versus in a place like Gabon, where we can tap into DFIs, we can tap into both Gulf capital and, of course, Far Eastern capital as well.
So you're saying it's not just a Canadian capital market question. You're saying just for a Saskatchewan-based project, it would be harder to find development capital?
And Canada-wide as well. In Saskatchewan potash specifically, but I'm talking obviously to a lot of folks who have projects in Canada. And it's not just lithium, but many others. I mean, they have been experiencing some issues there for sure, in terms of raising capital, especially for exploration plays.
Okay, Jay?
Yeah, so look, we're expecting a rotational move back to metals. I mean, metals are in the headlines of almost every newspaper you read across the globe right now. That hasn't found its way into investments as of yet. But I mean, but Howard, you remember you and I back in 2009, 2010, talking about lithium. You know, when no one cared about lithium. And the first 2 years of my lithium experience was running around the world telling everyone that you know, this thing called a lithium battery was going to replace the nickel metal hydride battery. And you know, we ended up with two of the best projects in the Americas, Cauchari and Thacker Pass. And then the lithium market caught on, and you know, and there was a market for it. So we feel the same way about copper. I mean, it's not a matter of if, it's just when. And we think that you know, I mean, copper prices, despite you know all the turbulence you've seen in the global economy in the last 3 months, you know, the copper price has held up very, very well. And so you know, so it's, you know, when you get that market move, we've seen it, you know, in the past, 1996 and other periods of time when, you know, people moved away from the metal space and the mining investment space. It just takes, you know, a small market movement. I mean, you know, you look at some of these large U.S. Capitalized companies that, you know, if that investment moved to our tiny little space in the world, which is, you know, a very, very important space for technology, for all of the conflict that's going on in the world, it all depends on metals, in a lot of cases critical metals, and of course I think it depends a lot on copper. So it is important, and investors will recognize that, and I think there's a lot of value to be created here, and investment returns to be made.
Okay. One question, as the only Canadian, I think, on this panel. You just had an election. Canada's been very much in the news between the U.S. and Canada. So is Mark Carney, I think he had some energy summit in Alberta last week or so. From your reading of that, again, getting back to my kind of capital markets question, there have been some very prominent people like Frank Giustra and Pierre Lassonde, who have been saying, like, the Canadian capital markets are broken because Canadian institutions are, you know, are able to invest, you know, anywhere in the world, and they don't have like a concentrated investor pool focused, you know, like Australia does, you know, superannuation funds, et cetera. Are you hearing anything or watching any of that? Because I think when I started in this business 23 years ago, Robert Friedland and Ivanhoe Mines in Mongolia, right, there was an active Canadian junior market where there were lots of, and there still is. My Canadian Canaccord broker, right, is still raising capital, but there has been a pivot. You know, there was cannabis, and you know, there was here and there, but it just anyway. You have a new prime minister, right? You know, Canada's making a bit of a change. So, any opinion on? Any update on what you're reading as a Canadian into this potential?
I mean, yeah. There's certain jurisdictions in the world that have very sophisticated know-how, you know, in terms of bringing on new businesses. You know, in Silicon Valley, it's technology. In Toronto and Vancouver, it's mining. You know, and it's been that way for decades and decades. And it started from, you know, the old gold mines in Bralorne and these different places in Canada. So that know-how is still there. And Canada, I mean, the Canadian, the Toronto Stock Exchange is still the largest mining finance center in the world. You know, there's three centers. There's London, Toronto, and Australia, and Toronto's still the largest. And so that will continue, you know, into the future. We have had a political change in Canada. The current administration, they want to turn Canada into an energy superpower. You know, getting back to our roots. We've got a lot of energy in Alberta that needs to find you know, a way to the markets, and so we're talking about building corridors in Canada, and so there's a national unity program going on now. And so to your point, yeah, there's every possibility that Canada makes its way back into a strong financial center on the basis of what's in their backyard versus what they've been doing the last few years, which is internationally investing.
Howard, just to add to that, it's just, I think in Canadian political circles, that one idea that has been really entertained, and I think hopefully they will come up with it and will mandate it. It's just similar to the UK. Recently, they've actually mandated a certain portion of UK pension funds actually be invested in the country. And that's something Canada needs desperately, because as you said, you know, our pension funds, our funds in general can invest anywhere, which is perfectly fine. But there's no real kind of almost, obligation on them to invest a certain part of their funds in the country. And that would, I think, actually jumpstart, again, not only mining, but many other sectors in the country. We can see that in the UK, literally in the last couple of weeks, quite a bit of money is flowing into the stock exchange there in London. So hopefully that will happen too. In other words, not just generalities and we want to do this, want to do that. It has to be specific government policy that will direct certain funds into development, not only, obviously, as I said, mining, but other sectors in Canada as well.
Okay, and Tate, a lot of the companies that I think you back or the U.S. listed are also dual listed, right, in Canada. So, and the U.S. investor, I found Canada is a big mining country, so people know about mining, and there's a whole institutional investor base, for that. In America, you got Newmont, and you got like Freeport and the S&P 500. There's not a lot of like fundamental deep knowledge, in the United States. So you have a lot of generalists, but we're obviously a much bigger country, and there are pockets of interest. And Maxim, I think, has brokers and representatives in cities all through America. Like, so what's the nature of the investor that like suddenly is interested in like niobium, out of nowhere? Like last year, they weren't really talking about that, and like, is that person investing in biotech? And so, how is that, and how is the dynamic between, the Canada listing, the TSX listing, and the U.S. dynamic?
Yeah, thank you, and thanks for the comments on Canada too. And the generalist investor in the U.S. is still the primary investor we're dealing with in the mining sector, but they're getting better by hiring people with geology experience to look at the mining sector, and still defer to Canada for the developed stock exchange and the number of listings that you have of mining companies and the knowledge base. And just as so, yes, the U.S. is growing in terms of the knowledge base, in terms of the mining sector, getting more listings. When I first started looking at the mining sector 3.5 years ago as part of my industrial coverage, I was very surprised that particularly in the small to mid-cap range, there were not as many companies listed on the major exchanges, meaning NASDAQ, NYSE, American NYSE, that I thought there would be. So there's more that are going to be dual listed on the TSX and NYSE American, NYSE, or NASDAQ, in my opinion. And then on the Canadian U.S. side, you can look at we all read the headlines, but back in the PDAC conference in March, when it was Liberation Day, whatever, everyone, in my sentiment, I would be interested to hear all yours, it was sort of trepidation what would happen between the coordination between Canada and the U.S., but I've just seen more and more coordination and more companies being able to expand their listings in the U.S. and more U.S. investors looking in Canada. So that's just been my experience at Maxim, based on covering both companies listed in Canada and in the U.S. too.
Okay, and Bela, to switch to Europe as a German, Europe has kind of passed a critical minerals law, and they've appointed a number of strategic projects. Yep. If you could just talk about what's happening in Europe and how what's happening there from a just critical minerals like policy perspective, and projects going to be advance there, and also just the U.S. Yeah. Also, Trump has had some discussions or issues with some of the European kind of counterparties in this regard.
Yeah. No, excellent point. And so the European Union that actually was talking about that last week as well. So the European Union, I would say, they had a kind of wake-up call, especially Germany, which after the Ukraine crisis, where basically Germany experienced how it's not a good idea to be dependent on one country for all of your energy supplies. As we all know, Germany used to be highly dependent on Russia for gas. Since the Ukraine crisis, basically Germany diversified largely the energy sources. It's important, actually, a lot of energy already from the United States. And I think that all was a stimulus for the whole focus on critical minerals, where the European Union now has realized how important it is to have a diversified supply of critical minerals, because the European Union itself has not access to many critical minerals. As we know, there are many critical minerals from China, Africa, but also Canada has a lot. So has the United States. So I think the European Union is now focusing very much on reducing its dependence on single nations. It's trying to work more closely with Canada, but also the US. And I mean, despite all the noise we have in some of the tariffs discussions, Germany, European Union, and the United States will always be strong allies. Will be nations working together because trade between both nations is important. Both United States, Europe will be supporting each other. Important, especially in the current geopolitical climate, when increased focus on defense is as well. So that's why I believe there's a strong opportunity now for the European Union and the United States, as well as Canada, to work closer together. And as you mentioned, it's already happening. And you see also the United States investing heavily into Canada, IPEX-Bank investing in projects in Canada. So despite all the political noise, what we see, I think there will be a strong cooperation between the allies. The allies are the European Union, United States, and Canada. And the focus will be to make sure that nations will secure jointly a reliable supply chain for critical minerals. And that's where we play part of it, funding that project with senior debt, but also our parent company, KfW, is providing directly equity to fund that project.
Okay.
It's interesting sitting, Howard, between two issuers too that are in other countries, if I'm correct, that you're in South America and you're in Gabon. And then I actually think, and you mentioned in international relations, that countries outside US, Canada, China, the current situation, I think, will help the project development because certain countries in South America, in Africa, can get financing from China, can get financing from Asia, can get financing from the US. It depends. Maybe there's more options, but
yeah, good point.
Yeah, it's actually a point I wanted to make. In Europe, CATL just the battery company just raised $4.5 billion in a Hong Kong IPO, but 90% of the proceeds of that are to build a large gigafactory in Hungary. So Europe's welcoming China on the campaign trail. Trump said, he would welcome an investment from BYD or CATL. He hasn't said that since. China's like taken over the world from a car perspective. Like they're manufacturing cars for like less than $10,000. I think they have enough production capacity in cars, I think for 50% of world production. So do you think, Tate, that I've been hoping and thinking that just like we welcome the Japanese, we welcome the Koreans, in the 70s and 80s and 90s, a way to kind of catch up with China is to welcome their investment, not just in the downstream, but also in some of the mining and processing where they have like a lot of expertise. Do you think, as the one American on the panel, what's your reading of how this negotiation may play out with Trump and Xi?
Thank you. One top-of-mind example is in your space. I covered Solaris Resources, SLRS, and Solaris had an indication of interest or a commitment letter from Xinjiang Mining to help finance its copper project in Ecuador. Solaris at the time was headquartered in Canada. Since then, they re-domiciled to Switzerland. So to open the pathway to get that investment from China, because there was regulatory pushback in Canada from taking financing from China. So I think it's two spheres of investing. Where I'm interested in is if your project or a project in Gabon, can you get both China investing in US and Canada investing in that project? Probably not. So, but you can choose which way to go. So Solaris was a good example to me about re-domiciling. Then you still, that company can still get the China investing if it goes down that path, or get investing from a major in the US.
Look, I mean, this is not the first time when we face this geopolitical tension. The only major difference I would say, and I think I mentioned earlier, is that the U.S. as a state is the now big player, or at least they're trying to become a big player in the space. I mean, we've always had this situation in Latin America and Africa where you have, developers in the form of Canadian and Australian companies, but then the Chinese coming and buying them out at some point, or at least trying to. And we saw that, for example, with our previous company, Millennial Lithium. We had actually a Chinese strategic investor in the company. They owned almost 18% of the stock. It was the largest solar power company out of China. And when the time came to sell the company, we had 3 bidders. Out of 3, 2 were Chinese companies, not that company. The other 2, we had CATL, by the way. We had Ganfeng Lithium. We ended up selling to Lithium Americas. So we always have that tension. Can you have them both? In that particular case, we did, but only because the strategic investor in our company was really a financial investor. They were not after the product itself. Now, but if you bring a U.S., let's say U.S. development financing institution, or IPEX-Bank, et cetera, can you then bring a Chinese strategic investor who actually wants the product? That's highly unlikely because the offtake obviously is bound for China. But if the U.S. gets involved, I doubt they just want to fund it, especially with the current administration. They want that product back in the U.S. So that makes a lot of sense. And I'm frankly very happy as a developer to see that the U.S. is entering the fray, because there's been a lot of talk in the West for the last, 4 or 5 decades that China is ahead. The only reason China is ahead is that they have to feed their people, they have to develop their country, and they think forward 20, 30, 40 years, and it works very well. And when they come to Africa, for example, they don't just provide aid. This is a perennial issue that we'll face. They actually build infrastructure that stays in those countries. So those countries are actually incentivized to deal a lot with China because of that reason. So if the Americans come in, or not all Americans, Europe for that matter as well, and do the same thing, then they have a chance of actually competing head on with the Chinese. In our particular project, we see that interest already from both the West and China. And I think, frankly, in our case, it's going to work in our favor. So we'll be able to actually leverage it.
Okay, it's interesting because I am following what Rubio and Trump are doing in DRC and Rwanda, and they're also building this Lobito corridor. My knowledge of all of the map of Africa is not so great, but in West Africa, where you are, Gabon, could you benefit from that? I don't think so. Maybe not on the Lobito corridor, but maybe. But overall, the U.S. attention to in his first term, I mean, Trump had a very derogatory name for some of these countries. I don't want to say it here, but he's no longer saying that. He's actively participating and realizing that China, with their Belt and Road policy, is something that he needs to kind of emulate. So how might
I think we see the results of that positive work already, Howard. So, for example, with Gabon, we already have a strategic partnership agreement signed between the U.S. and Gabon. Now, Gabon is a very small country, less than 2 million people, but it's a significant oil and gas producer. Most importantly, it's in a critical location, and it's not really allied with anybody per se, meaning, of course, it's a Francophone country, but they joined the British Commonwealth. They do well with the Chinese, with Indians, and now they really want to bring an American capital into the country. And I think that's kind of precursor of things to come. It's not just Gabon, of course, some other countries. And it's perfectly understandable when the West, in this case the U.S., is selective in terms of what countries they want to work with, because some of these countries are obviously quite problematic and no one is going to come and solve their problems. So in this particular case, we think the benefits already, meaning that it starts at the top level, meaning that the country-to-country comfort. And then after that, of course, the investments start flowing. Hopefully in the next few months, you will see that in our case as well. But we've never seen so many Americans in Gabon in the last 2 years. So that's just, an incredibly positive indicator of things to come.
Okay, it's been an interesting arc. I've been doing this for 23 years, and I just came from a conference last week in Washington, D.C., put on by Benchmark Minerals, and I had been there in 2018, and the whole of government approach from the Department of Energy, State, Department of Defense, Treasury, everybody, they're trying to figure it out, but we have a new administration now, so a bit of a different emphasis, not so much on battery metals and not so much, again, energy transition, but there definitely is a paranoia and a realization that we need to kind of catch up, and that's why I think you're seeing so much on the executive order front on faster permitting and promoting of mining. And I think overall, again, getting to it from a capital markets perspective, mining not only like in America just hasn't really captured people's imagination because we're not so much. We used to be a mining country, but there's been so much anti-mining, right, in America. So you don't have a lot of people that go to geological school, the Colorado School of Mines, et cetera. So you're starting to see a promotion of this from the Trump administration, which I think, in a similar way that under Biden, right, ETFs that focused on clean energy, right, were suddenly hot for a while, and a whole bunch of SPACs and EV companies and also mining companies like MP Materials and Rare Earths and Lithium Americas got put into these ETFs, but then those clean energy ETFs had major outflows, so those stocks got crushed. So I'm just wondering, maybe you're seeing this like an inflow into mining-focused funds, right? Like new funds being created, but also just like a sentiment shift that like, oh, okay, gold's going up, right? Uranium's doing okay. Some of these, I own the URA and the GDX and the copper ETF. Are you seeing that dynamic take place? Like as each quarter goes by, you say, oh wow, outperformance here. Maybe allocate more money to the space because Trump's supporting it and the returns are good.
Right now, I think it's event-driven funds. To your point about anticipating the executive orders, so there is some short-term money there in the mining sector anticipating. I mean, looking back at the last 5 months, what has happened, and I think a lot of people did expect that to happen. The executive orders coming through the fast-track permitting process. In terms of dedicated long-term mining funds, yeah, plain vanilla funds. I haven't seen any new mining funds named, but they are getting more. I mean, I'm not getting any more incoming calls from new funds, but still consistent from the larger firms that know the mining sector. And we'll probably, well, this is speculation on my part, should identify more investments in the mining sector. Because we're small and mid-cap, my coverage now in the mining space as well, we are seeing more, I'm getting more calls from Canadian investors as well, funds, looking at the U.S. listed the companies that are just listed in the U.S. But hopefully that's another growth layer to come, more dedicated mining funds in the U.S.
Yeah. And Howard, my belief is, mining, these are long-term investments that last decades and sometimes generations. And because of that, economics and geology really have to drive the mining investment, and not so much jurisdiction. And so, you see this even, just an example in the aluminum space. I mean, Canada is one of the largest aluminum producers in the world, not because they have bauxite ore, which is where aluminum comes from, because they have low energy and some of the cleanest energy in the world. This is all out of Quebec, and this is renewable hydro sources, and that's why Canada makes, and that's the same on the West Coast too, in Camino, up in British Columbia. But that's why Canada makes some of the best and cheapest aluminum in the world, is because of our energy position. And so I think a big topic here when we talk about critical metals and strategic supply and all that, you need to look at comparative advantage. And either your country has a comparative advantage or it doesn't, for whether it's in metals or technology or other things. And so I think these are multi-decade investments, especially in copper. And so you've got to go to the countries, the jurisdictions that are politically stable, that have a comparative advantage, and that's where I think investors should be looking, and these new funds that are being created. Will ultimately invest, for long-term returns in our space.
That's great. We have 2 minutes left, and on that point, I want to give an opportunity actually to Farhad and to you as the two issuers on this panel. You talk about comparative advantage. Investing in junior mining is very risky, but one way to kind of screen a good investment is to bet on management who have created shareholder value before. So Jay, you created shareholder value, and we had a good ride together. back in the day of Jinshan gold mines in a China gold story that went from 25 million market cap to 450 million market cap over the course of, I don't know, 6 or 7 years. So that was a initial success, and then it was a long duration on the lithium side with Western Lithium turning into Lithium Americas, which again now has $2.3 billion of funding from the U.S. government and $1 billion from from GM, and in Argentina, has also partnered with Ganfeng. So 2 successes there. Just a short pitch for everyone here, and this is being recorded, so we're going to be publishing this on our channel as well. Why invest in Camino? And Farhad then will ask you to do the same.
Yeah, so thank you, Howard, for that. There's 2 value drivers for Camino. We're building a mine in Chile, so we expect a re-rating on that production asset, which we believe will be producing in a strong copper market. And number 2, we are drilling in Peru on a very advanced, exciting exploration asset this year. So as an investor coming in, you've got a management team with a nice track record, but you've got an asset in Puquios, which is your base investment for a re-rating and growth in copper production. And then the excitement comes from the drilling results that we continue to put out of Peru, and we think that's going to be our next mine to develop.
And Farhad, we worked together at Alana and then Millennial Lithium.
Yeah, so look, with Gabon, there are really 3 major advantages. It's a potash project there. First, the lowest cost structure. So the PEA has shown that it is actually more competitive than even the lowest cost producers in Russia, Belarus, and Saskatchewan. The second thing is the availability of infrastructure, which is critical for any project, but especially for potash, because most of these potash basins happen to be smack in the middle of continents, again, like in Saskatchewan, the Urals, in Russia. So we are right on the coast of Gabon. The port is 50 kilometers away. And the third thing is actually jurisdictional risk. I think we touched on it earlier, but that is sometimes even more important than the project. You remember, Howard, when I was looking for a lithium project in 2017, you could have actually picked up excellent Chilean projects. Meaning excellent, technically speaking. They were actually grade-wise, they were twice, if not 3 times of what we had in Argentina. But the reason we didn't go into Chile was very simple. The copper is different, that it was almost impossible to get a water permit in Chile. So I would have been sitting on that project for 10 years, 15 years. In Argentina, yeah, the project maybe was not as great compared to what you had in Chile, but we knew that we could actually push it through pretty quickly, especially in the province of Salta. So just to give you an example of how important the jurisdictional risk is, because if you end up with a great project in the wrong jurisdiction, well, not good for our shareholders because they'll be stuck for many years. So I think those 3 major advantages we have in this project as well. And the reason we have low cost is that this is one of the thickest potash deposits in the world. We're looking at about 70-meter thickness at the thinnest part of the project, and that translates into lower cost structure because we're using what they call solution mining methodology, which keeps your cost structure low, but also it has a minimal environmental impact, which is also important, obviously.
And you also, in Millennial, I remember lithium and Millennial Potash, it looks the same. Just from a capital structure point of view, you seem to have a very tight register. You said 30% owned by management and directors, and you've raised money all around the world with your prior successful track record, in the Middle East and Singapore. So good on you. The market cap of Millennial Potash is?
Well, the stock has done pretty well, actually. I think in the last 6-7 months, we went up about 5x. So from 20 cents, wow, we're trading around $1.30 right now.
Wow.
Because we had fantastic drill results, actually. This year we're doing second stage of drilling, and we're expecting it in thickness of about 70, 80 meters. But this particular drill hole produced almost 290 meters of potash, which is absolutely insane. I couldn't believe it. I had to reread the report several times before we even reported it. And I think that obviously sent the stock flying. So the market cap is still very small, within $120 million Canadian, which is frankly, massively undervalued compared to what we're going to have down the road there.
Very good. Thank you very much to Bela and Farhad and Tate and Jay for a very interesting discussion.
Thanks a lot, Howard.
Thank you, Howard.